Aloha, I'm Eileen Lacerte with Better Homes and Gardens Island Lifestyle. Today we're going to talk about jumbo loans, conforming and non-conforming. And today with me I have Jim Allen from Guaranteed Rate Mortgage.
Hi, Eileen.
We've got lots of options.
Lots of options. So jumbo loan is any loan that's above $822,375 is considered to be jumbo or non-conforming. And non-conforming meaning that it's not something that could be saleable to the secondary market, which is Fannie Mae or Freddie Mac. So they're larger loan amounts for more high-end properties. And we can go up to a maximum of $3 million per credit policy.
Sometimes my high-end buyers have more issues qualifying for a loan than my first-time buyers do. And it's not due to bad credit, ever.
No.
It's due to all their issues being self-employed, right, or they're buying an LLC, and
their financial picture is going to be more complicated.
It's so complicated.
And most of the times, like you said, they'll be self-employed. They'll have more than one entity, and they don't like to provide all this information because they're busy running their businesses. Right. And now we're going to come in as a lender and ask for, the most recent 2 years personal, business, all their K-1s, all of their bank statements, all of their assets, which a lot of people in this price range are, they're just think, why don't you just give me the loan? I'm worth
millions,
million. But per federal law, we have to verify that they can qualify, and the only way we can do that is to get all of their income, all of their assets. If we don't take that into consideration when we underwrite, we could be at risk of having to purchase that loan and paying that loan off for them. That's some of the consequences with the ability to repay law that is in place now. But it doesn't mean the issues are things that we can't resolve. It doesn't mean that we won't be able to give them a loan. It just takes a little bit more effort on the borrower's part. And there's ways that we can kind of work around that. And the first question I ask them is, do you have a CPA that would be able to handle all of your financial information? Do you have a financial advisor that could provide the bank statements? And sometimes that way it'll be easier for them to do that. So we try to use other professionals that they're using to provide the data that they want.
I think my kind of worst nightmare is the one where, oh, no, I'm not using your lender or your bank. And of course we're in Hawaii, so their bank usually is in, name a state, that's where their bank is. And their banker will do anything for them. So they want to use their bank or their lender back on the mainland. And usually that's a bad call. Not always, I'll say not always, but 9 times out of 10, my first thing is, can you call your lender or your banker and ask them if they're licensed to loan in Hawaii? Let's start there, and many times they're not. Or you try to use somebody locally from their town and so on, and they're not up with their corporate regulations, for example. If you come to me and say, oh no, I want to use my Bank of America bank, I'm like, don't even go there with me unless you have a private banker, and then it's not through Bank of America anyway. Because they don't make loans here. I don't care what their local person says to you. I'm not going down that road again. It just, many times it's just a nightmare.
And then it's, the ability to lend in all states. I mean, we have Guaranteed Rate. We're licensed in all 50 states, and we can do business in all 50 states. Would I do that? I wouldn't, because I would refer it to somebody that is local, that understands the market, because each market is going to be uniquely different. And Hawaii is uniquely different. Just as an example, when we talk about resort condos, we have a lot of resort condos. You're going to have these people that aren't familiar with what a resort condo is, and they're going to say, yeah, we can do this loan.
Right.
And they get down the process, and they get the condo docs, and they go, oh, this is a condo hotel. We can't do it.
Right. Most banks consider condos, condo hotels now. Right. And I have the war story. Mr. Big, Mr. Corporate Big said, I said, Bank of America won't do this loan here. Oh, if they want to keep my business, they will do this loan. And of course, 45 days into it, they said to him, oh, we can't do this loan. It's a condo hotel. Though it was not a condo hotel. By any means or any legal description, it was not a condo hotel. So we were 45 days into his escrow when, I kept saying to him, they're not going to they're doing it. I said, wait till, you want to close. They're not going to do it. And sure enough, they didn't do it.
Yeah. So those little unique market intricacies, and then Hawaii being a resort destination.
Yeah.
It's like, I know, if I was to, as an example, like to do a loan in New York, yeah, I could do it. But I don't understand the market there. I don't understand the intricacies that are within that market. And it's the same thing when people are coming to Hawaii. They should at least consult with somebody locally so they can understand what it is that they're lending on. But a lot of them are, hey, I know what I'm doing. I do this all the time.
My bank will do anything to
This
keep
is a
my
high-end
business.
client. We'll get this loan done for them. And that is a bummer when it comes to the fact that they don't understand and now can't do the loan.
Yeah. So that's just one hurdle we go through with the high-end buyer. And from your end, it's they don't want to show you their finances.
Well, and they're affluent, and they feel, and this is the thing, if they're getting a loan, a lot of them have the ability to pay cash, and I get it. So for us, we're trying to show them the benefit of getting a rate at 3% versus liquidating their stocks to pay cash.
That's it today. And today, I would say in the price range where I mostly sell here in the resort, my buyers are cash most times. Not today in this low 3% interest rate, because my affluent buyers say, I'm not liquidating my stock when I can borrow at 3%, or I'm not using my cash when my cash is making me more than 3% a month. So all of a sudden, I now have my affluent buyers taking out loans, and maybe sometimes only 50% loan to value, but they still have to go through the pain. And like you said, it's like, hey, I could pay cash for this. Why are you asking me all these questions? But it's just something you have to go through.
Yeah, and then, getting a loan in the process, it's if they want to finance, they're going to have to. Unfortunately, there's no other option but providing all of the information that we need. There is a unique opportunity that they can have if they decided that they want to pay cash because they're competing with a cash offer. They still want to get financing, but we can do what's called a cash recoup.
Yep.
If they apply for the loan within 90 days of closing, we can do a cash recoup where we can recover the cash that they put in up to the standard loan to values that are for the loan program that we're looking at. And that allows them to, pay cash and then be able to recoup that investment. That's something that is pretty good.
I actually have done a few of those because they're competing against other cash offers. Even though they want a loan, they don't want to use their cash when they can borrow at 3% or less even sometimes. They'll say, okay, I'm going to pay cash, but I'm going to do an immediate refi. And I'm like, okay, that's great. Many people do it that way.
Yep, there are a lot of people do that. The other option that we would have, say they're looking to buy a property and they have a property that they're going to sell. So they can go in and finance and make the purchase, complete the purchase. And when that house sells, they have the option of taking proceeds from that sale and paying down the mortgage and re-amortizing it so it would reduce their payment.
I love that, and also have had that with clients. You might imagine I do a lot of 1031 tax exchanges, and when I say exchanges, I also mean reverse 1031 tax exchanges, which is another whole nightmare, as you know, for the client usually. And so sometimes they have to, and you did one of these loans for me, where they had to purchase the new house first, and then it was a reverse 1031 exchange, and then they sold the other property. In this case, it was a rental on the mainland, and they bought a vacation home rental here, and so they closed escrow on and got a loan with you for the purchase of the Hawaii property. And we did a reverse 1031 tax exchange. And then when their other property sold on the mainland, they took proceeds and paid down their loan to you and re-amortized their payment. So it was a fabulous loan situation.
So, yeah, that's another option is there, the reverse exchange, but there are limited options with a reverse
Yes,
exchange.
yes, I understand.
Yeah. This type of buyer is looking at hold titles probably in an LLC or definitely
Or
in
trust.
our trust, which are all acceptable. We just need to review the documentation they have to make sure they're acceptable, and we can title it in an LLC or title it in a trust.
And that's even a little more complicated too, because you have to go through all the LLC documents. I just did one where the LLC consisted of a father and his 4 sons and the 4 wives. So that was a lot of signatures, may I say. Anyway, but again, usually the higher the price range, the more complicated the financing is.
Yep.
You know, it's
Exactly.
and the less patience they have because they do have money, and they want you to just say, "Hey, I see you got money. Let's do this loan." But it's painful, and it's hard to when they're so busy, as you brought up in the beginning, like from a realtor standpoint, a doctor who you're trying to do a loan with, that is a tough one because they're busy. I mean,
busy.
we're all busy, but they're busy. And trying to get documents from them if they don't have a CPA and so on, you know, it's a chore. It's a chore.
No, I was doing a loan for a doctor, and he was not providing the documentation that we needed. And the selling agent was freaking out, like, where's the documentation, where's the loan approval? And I says, you know, his CPA is out. He's not going to provide anything till the CPA comes. He's extremely busy.
Yep.
He's a heart surgeon.
Yeah.
You know, he's saving people's lives.
Yep.
You know, he told me, don't ask me again. When my CPA comes, you'll get everything.
Yeah.
And the listing agent wasn't satisfied with that and went to him directly, and he canceled the deal.
Canceled the deal, yep.
He said, I'm done, and went ahead and bought a similar condo for a higher price, use a different agent.
Yeah.
You know, so that's something that will happen. You have to be careful because and it's everybody's life. You know, everybody's doing other things, but you know, it's how you handle that and how you talk to them and provide that solution.
And you know, giving credit to the doctors, at this time of this filming, we're in the middle of COVID, and those doctors don't even get sleep, let alone, you know. I had sold a condo, vacation rental, just before COVID hit, and my clients had, you know, refurbished everything, new appliances, everything, and COVID hit, and they called me and said, I don't think I'll be able to come there for the next 2 years to that property, you know. So you understand, but no going in sometimes on your high-end clients. It's going to be a challenge.
And the other thing is to make sure you have an appropriate escrow time.
Yes.
Because, you know, you set up expectations up front. You know,
Right.
everybody wants to do a 30-day close.
Right.
You think that's doable in this market, getting in the loan? Yeah, maybe if everything goes exactly right. But if it doesn't, you know, now you're going to be asking for extensions. Everybody's going to get irritated that it's not closing on time.
Yeah.
You can't get an appraiser out there.
That's-
Escrow
yeah.
can't get their prelims. They're behind as well. The whole industry is overwhelmed with
Yeah.
what the volume that's going on. So having a realistic time frame, you know, is very important. Like I said, can we close it in 30 days? Yeah.
Yeah. If
You know, if
you
know,
provide the documents and we can get an appraisal that early.
right.
And a lot of times, I've had escrows that are 30 and 60 days behind, and it's simply because of appraisals.
Yeah.
My recent one, I think it was 45 days past closing that we actually closed, and I hate to harp on it, but it was a mainland lender, and they ordered an appraisal locally. They went to the back of the line. You know, they didn't get an appraisal for 30 days till the appraiser went out there. So that was tough, and we're lucky that our seller stayed in the game because in that time the prices were raising. They could have canceled the escrow and got maybe a higher price. But
And there's, you know, surveys.
yeah,
Termite tenting, if you need a tent. I mean, they're 60 days
Right.
out, right, to get
Yeah.
a survey, to get
Yeah.
a tent done, and that's the part that they get stuck in.
we had to we had that situation where the house couldn't be tented, and in Hawaii, that's kind of a common thing. Termites are a way of life here, and we couldn't get a termite company to tent for, it was more than 60 days. So we had to work with the lender, and we did, but all that money was held out, and we were able to close. But yeah, lots of things to deal with.
Yeah, you can do a holdback, but sometimes it's difficult to do a holdback because we're trying to determine whether it affects the health and safety, and you got termites, and if there's damage that's needs to be vetted out. But yeah, you can do it's 1.5 times the cost of the tent.
Correct.
We can do that as a holdback. Surveys, I know we can't do a holdback on a survey.
No.
So those are the items, and and if everybody's just upfront aware of what's going on with the time frames, and it's not like somebody's not trying to do what they're supposed to do. It's just the industry is overwhelmed right now, and some people don't care.
Yeah.
And then whatever, you take it, and then you get into a transaction that gets to the end, and then you risk losing it, and people get upset, and it's not a good feeling to be in that spot. So
this weekend I talked to a potential buyer, and they were looking for, let's say, I think it's going to be about $2.2 million unit. That'll be a vacation rental when they're not here, a self-employed professional. And I said, and when I was, going through the process with her, I said, and will you be getting financing? And she said, yes, I will. And she said, and I know realtors hate that. And I said, I don't hate it. I have no dog in that, fight. If you're getting financing, fine. If you're not, fine. It takes longer, and that's why I need to ask, because I have to make sure our escrow is long enough. And she said, don't get me wrong, I could pay cash for it, but why would I at 3%? I said, I said, I 100% agree with what you're saying. I would do exactly the same thing when money's at 3%, right? So all of a sudden, us realtors that deal in the high end are used to writing cash offer after cash offer. Hey, close in 15 days, close in 30 days. Right now, with the cost of money so low, that's not happening. And they're starting to get more and more financing than they did in the past. And so you have to, mostly you have to prepare your buyer for all the questions.
And obviously they have the ability to pay cash, and that's what they need to compete with other cash offers. They can do the cash recoup.
Cash and then recoup.
Yeah.
Sometimes my high-end clients want to get a loan for really a short time, like they're getting ready to sell their business, or I don't know, there's a million different reasons. So they're looking for, let's say, interest-only loans. A lot of them love those interest-only loans. Do you have those?
We do have interest-only loans, and what a lot of people are looking for is that they're looking to just pay as little, well, not little, but just pay the interest on a loan. And then they have the ability to pay down principal, maybe if they get a huge bonus or a huge sale or a huge commission, and they'll take that money and pay down that interest only. Interest only loans can go for the interest only period would be for 10 years. And then it would amortize after that 10 years, and the principal would start. So what would happen after 10 years, obviously, you're going to have to amortize that over 20 years, so it would be a huge payment.
Yeah.
But again, people with this type of wealth have no problem in making that payment or in paying down the mortgage.
Right. Because
but an interest only is a very good option for a lot of people.
As I said, I have a lot of clients that want that interest only because something is coming in the future. So they want minimum payments now, and then they're okay. They're probably going to refi before that interest only comes due.
You
correct?
would do that?
Yeah.
Yes.
Yeah.
And the difference of what that interest only payment would be versus a fully amortized payment, they're probably taking that money and investing it elsewhere. So that's one of the things that they would be doing. So that's another option. Interest only loans, they're a little more difficult to qualify for. Is that you have to amortize a loan over the 20 years.
Instead of 30?
Instead of 30 years when you qualify. And it requires a little bit more of a down payment, because there is more risk in
Yeah.
an interest-only loan. So, but yeah, they're available, and we do them all the time.
Great, great. Well, thank you for visiting with us today, and I'm sure we'll have lots more questions.
You're very welcome anytime.
Aloha.
Aloha.